Now, Pakistan's currency has taken a sudden and sharp drop, marking its worst plunge in nearly a decade. The Pakistani rupee fell more than 3% on Tuesday alone, closing the day at 108 against the US dollar. The International Monetary Fund highlighted last year that the currency may be overvalued by as much as 20%. The sharp drop is expected to push up prices and inflation.
The currency was not really depreciated for the past 3 years. It was just 1% on average depreciation a year, where you see the regional peers, their depreciation are much higher than that. So it was having a hit on our exports competitiveness, and imports were becoming cheaper. And we were growing at a high pace, demand is upbeat. So the current account took a plunge in the last quarter, its highest in the since the crisis in 2009. PML and government has this great affinity with a stable exchange rate. When you go a bit difficult time politically, you tend to take those decisions, under the cover of those political chaos. If you see the trend of inflation and exchange rate depreciation, you would see a very high correlation, about 0.75%, which is very high. And so this would bring imported inflation home, and that would cascade into other products that are out there. If we get a depreciation of 3% at this point, it would have an inflation maybe next year, which is targeted at 6%, may hit about 7%. But if that goes like up to 7, 8, 10%, something like if the rupee go down to 115, which is about 10% from 104, 0.9. So that would imply that the prices would go up quite quickly, and that would imply some slowdown in the growth and a bit of suppressed demand and interest rate going high, and government getting back to that. So that's not the great equation. So I think keeping that rupee in a short term in 3 rupees now, maybe 3 rupees in the next few weeks, then wait for another few months, see how its impact on the exports, and 6 months down the road to take another decision. I think Pakistan economy is a great place where the demographic dividends are there, the middle class is upbeat, the potential is there. There's so many gaps in the consumption which are being filled, and they're required to be filled, that foreign investors should think countries seriously. With this depreciation take place, I think it's the right time to enter into the market.